Edward is a once famous financial advisor from the UK. He is joining me in studio. Welcome.
Welcome, thank you.
Well, there's a graph we're going to pop up on the screen right now. This is the graph of your investment track record. And I actually believe that this graph continued on for 17 years after the fact. Is this true?
Well, it is true. It was monitored. I had a heck of a job getting the media to believe it was true in those days because Professor Farmer, then Dr. Farmer, said that the markets were efficient. So whenever news came out, the price in the share prices was reflected immediately or very quickly, and so there was nothing that you could do to beat the market.
Okay, was the graph monitored?
Yes, I sent all the transactions to Planned Savings magazine, an independent monitoring magazine, and they confirmed that it was true. So the question was, what about Fadia? And the answer was that people who read his papers just remembered that markets were efficient on a day-to-day basis, but they didn't notice that you could also bet on a trend. So if the news trend was up for the market, you could invest in a rising market. And if it was down for the market, you could invest or escape, which is what I was doing. I just put the money on deposit if I had to. Or I'd look for another country where the trend was different.
Right.
And I was able to do that at a cost of 0.5% of the capital on a weekly basis at first. And in due course, eventually it became 0.25% or 0.1%. Wow. More or less, well, on a daily basis, and it became a huge industry. People copied me, and last I heard was £2 billion was invested in that industry. Jeez. It was called broker bonds.
That's a huge accomplishment. Does this track record not disprove Professor Farmer's theorem of efficient markets?
You could look at the policies that were being introduced by the government or the Treasury or the central bank, and you could say this is going to produce a trend, and you could invest in that trend. And so I didn't change my investments more than once or twice a year. I wanted to buy into the trend, and when I felt it had stopped, I would just have another problem, which I dealt with by something called a news probability chart. I'd ring up a London stockbroker and say, if the news is this, what's the effect on the market? He said plus 10%. So I would say, what's the chances of that? He would say 20%. So you'd multiply 10% by 20%, and you get an aggregate sort of percentage. Right. And then I'd give him several other news items that might occur. And we'd get these answers, we'd add them up, and if the answer was positive, then we would stay invested. If it was negative, we would be careful.